Now we're going to look at the insurance needs analysis calculator, and you may have come from this page first. This is a Christian Super insurance page that I've set up with 3 steps helping you to understand the types of insurances and how they work. It also helps you work out how much cover you might need, and then the third step is applying for the cover you require. Now step 2 here, which is what we're going to walk through now, is trying to work out how much insurance you need. Now if you just click on this link here, so simple calculator, that will get you through to the link that you need to try and work out what sort of level of insurance cover you require. I'm using Safari, so it actually helps to press the command key and open the tab in a new link, and open the link in a new tab. And that just enables you to switch between the two. If you need to go back to switch between this screen and this screen, or this page and this page, enables you to go back between the two. Particularly when you're filling out the form, it might be useful to keep this tab open. So the needs analysis calculator is designed as an estimate, or to give you a gauge of what sort of level of insurance you might require. It doesn't include an estimate for trauma insurance. Now, it is only for life cover, total permanent disability cover, and income protection cover. There is a case where trauma cover can be a good alternative to income protection cover, where the person being insured is not working enough hours, generally about 15 hours a week, to qualify for income protection cover. Trauma cover can be a lump sum payment that can be paid out as an alternative to income protection cover, but you can also have trauma cover as well as income protection cover. So if you wanted to be insured to the total maximum, then you would have death cover, TPD cover, income protection insurance, and trauma insurance as well. So to work out the estimate of your insurance needs, then just complete each question in the form. So your final expenses. This means that if you die, what are your estimated medical and hospital, funeral, and estate settlement costs? And let's just say, for example, that would be $10,000. Then you might have some. You might need a new car, or it might need replacing. So you might say $20,000 for that, and potentially any home repairs that are on the go. The other item is your children's tertiary education fund. It might not just be tertiary education fund. It might actually be high school or primary school as well, if you're going to private school educate your children. So let's, for example, in this case, say that we've got 3 children, and we're going to send them all to high school. They're currently in primary school, in just a local primary school, and so we need, say, $20,000 over 6 years to put them all through high school. And that would mean that we would need 6 years times $20,000 is $120,000 in order to pay for the 3 children's high school education. You can also allow for primary and secondary education, but just put in a figure that represents the total education cost for that one child, and then put in how many children you have. The next thing is the mortgage repayment. So this is generally the bare minimum that is recommended for insurance, that if you have a mortgage, then at least have insurance cover to the value of your mortgage. So if you have a mortgage of $200,000, you would have at least $200,000 of insurance cover. In particular, death and total permanent disability cover. So in this case, $200,000 of mortgage still outstanding. If you've got car loans, credit cards, other finance loans, or other debts, then you should really allow for those as well, but hopefully get those paid off as quickly as possible. Then you have your annual future dependent and home care expenses. So this is estimating the income that you would need and for how long you need it. Should the income that you currently get from the main breadwinner, or from both of you, should one of you become ill or die. And so You might have $10,000 of dependent expenses over and above the education expenses. You might have food, clothing expense of $20,000. You might have a home maintenance expense of $5,000. And you might have other regular expenses of, say, $5,000, or you're probably more like $15,000 to get us up to, what's that going to be? $50,000, I think. So, yeah, $50,000. That's probably a reasonable figure. Often they say that a couple in retirement with their home paid for, to live a comfortable retirement, it's about $53,000 at the moment. So $50,000 is a good estimate. And if the kids are all at primary school, they've probably got at least 6 years. We'll make it conservatively, plan for 10 years of needing to support the kids through schooling, etc. So what we're saying here is that you need, that 10 should be up here. And then we're saying that you'll need that $50,000 a year because you can't work because you're looking after the kids for 10 years. And we're going to assume a lower interest rate after tax. So your net return after tax on any lump sum that we paid out, that's paid out from your superannuation, is earning 5%. And then you can reduce the level of insurance cover you require by the assets that you have. So say, for example, you've already got a life insurance policy of $100,000, and you also might have some insurance cover within your superannuation also. So they might have $100,000 of cover there. You might have $20,000 in the bank, and you might have, let's say $40,000 of shares as well. And these assets can mean that you can take out a lower level of insurance cover, because you could use these assets or this level of cover to reduce the new cover that you need to take out. And then finally, you just put in your income. So let's say $100,000 of income, and you could specify a lower amount than 75% of that salary as your required income. But you can cover up to, in some funds allow up to 85% of your income being covered. And what that's trying to do is allow for the 9% superannuation guarantee payments that your employer normally makes. But 75% is the standard figure. You can make it 50% or lower. You can choose whatever level you like there, except you can't go over 85%. Then simply click Compute Now. And the amount of insurance cover you require, or your estimated insurance cover, this is just a starting point. You need to then factor in all your own personal situation, think through whether there's any other factors in your actual personal situation that might mean that you need more or less cover. And but this ultimately gives you an estimate of the level of cover that's required. So we need a lump sum to pay for all our expenses of $590,000. We need to pay for our ongoing expenses of $50,000 a year for 10 years, assuming that we earn 5% on the money. The amount of lump sum payment we need is $386,000 for that. And we also have existing assets, so that reduces the requirement a little bit as well. So $260,000 of existing insurance cover, cash and shares means that we can reduce the cover a little bit. So it's estimating that we need $716,000 of death and total permanent disability cover, and $6,250 a month of income protection cover. If you've got any questions about it, or you would like us to provide a specific personal recommendation for you, then do give us a call. Or if you've got a more generic question, then you can type it in at the bottom here, and we'll answer your question via on this actual page. The next step after this is to then go and apply for the cover. So if you're a Christian Super member, then you can go back to this tab over here. So go back to the Christian Super Insurance page. Then it's just a matter of following the instructions here to apply for the cover. But you will need to Because the calculator currently over here, the calculator doesn't calculate how many units of cover are required. You will need to, at the moment, go to pages 4 and 5 of the product disclosure statement or the insurance guide, and just calculate the number of units you need for the level of cover. So you can just follow through this formula. So you know what level of cover you require from the calculator that we just did. You can put that in here. You can use the tables on the next page to work out how much cover there is per unit for your actual age. Follow through here and you'll work out ultimately how many units of cover you require and also how much that was going to be. Hopefully soon we'll get the calculator working so that you don't need to do that. It can just be calculated for you. But give that a go. So death and disablement cover in this table and income protection cover in this table, and the other premium levels and levels of cover are on page 5 here for both those as well. But have a look at that video, because the video here walks that through in a little bit more detail. So do ask any questions if you like, or you can call into the Christian Super Help Desk on this number, so 1300 360 907. That will get you to the Christian Super Help Desk. If you wanted to contact Cornerstone Wealth, that's us, then you can call us on 1300 275 428, or on that number you can also leave a voicemail question and we'll answer that question on a podcast at a later date. And you can listen to our podcast by going to resources and podcast. And the other thing you can do is at the bottom of either the insurance page here, you can type in a question or comment there, or on the actual needs analysis, you can type in a question there as well, and we'll respond to it on the actual page. So I hope that's helpful for you. Do let us know if we can assist any further.